Hello, I'm Nick Cheek, Managing Editor of Mortgage Solutions, and welcome to today's debate in association with Family Building Society. Let's introduce our guests. We have Darren Deacon, Head of Intermediary Sales at Family Building Society, Richard Merritt, Director of Strategic Relationships at Simply Biz Mortgages, and Greg Cunnington, Chief Operations Officer at LDM Finance. Welcome to you all. Lovely to have you here today. When it comes to actually funding a mortgage, we have funding a later life mortgage. There are different people with all kinds of different circumstances. How can they go about funding a mortgage? I'll go to you, Darren, actually, on this one.
Well, with ourselves, there's many ways that they can fund a mortgage into later life.
Yeah.
So typically we will take an earned income, let's say to 70 or 75, depending on their individual circumstances. So beyond that, we'll be looking at pensions, be it a state pension, a fixed pension. We deal with people that have pension pots, which is quite a unique angle that we take to this, in that we would take 80% of the value of a pension pot and we can divide the mortgage term into that pension pot.
Right.
So we can increase the affordability to help get that mortgage to fit. So we can play with that to get that to work, and it works particularly well when we're looking at an interest-only mortgage. Other things that we can use are rental income, and what we'd class as a non-earned income, a passive income, where a limited company director are sitting in the background of a business. Usually it's a family-run business. They've got other managers managing the day-to-day operation, and we often have that older borrower sitting in the background, effectively in a consultancy type of light touch basis. There are many ways that they can fund that mortgage into later life.
Great. Rich?
So I think for me, the focus on the customer and how they can do this, because there's a range of different options. Obviously, you've got pure equity release, where they don't have to service the debt, so they can have a roll-up of interest and there's no monthly payment. There are obviously sort of caveats. You are tied in. It's a sort of once and final decision. But a lot of the equity release products allow you to service that debt as well. And then obviously you've got mainstream mortgages. Darren's just touched on a lot of the innovations and the options for that, and how they can be reached through different assessments of affordability. Yeah. So I think, again, it's an awareness that there are lots of potential options for a customer, and being able to look at all of them to assess what's most appropriate for each individual need.
Great. And we alluded to this earlier on in the debate, looking at how the later life lending market and those borrowing can actually help first-time buyers and others and their dependents to actually get on the property ladder. Greg, I'm going to turn to you and just ask, so how can they help family members and first-time buyers?
Yeah, great question. And this is actually one of the main reasons we as a business are going into the equity release market, because we feel actually there's a whole approach here where there should be more joined-up thinking on social mobility and first-time buyers and property ownership, where if you look at the numbers, I know they were released in the press, but the number of property stock owned by the kind of over 55s in the UK and the percentage of it which is unencumbered is vast, in the billions and trillions. And I'm sure we all see it day in, day out, first-time buyers just complaining they have no deposit, can't get on the ladder. We've all seen the press from the Skipton 0% deposit and how loud that noise has been instantly.
Yeah.
But actually there's a lot of joined-up thought there to go, actually, if you do have this £1 million unencumbered property and your grandkids are telling you they can't get on the property ladder, isn't one solution to take some of the money and pass it down there? And then obviously this goes back to some of the points Richard's made, which I think in this space is really important about joined up thinking with wealth and pensions and everything. There's obviously inheritance tax benefits as well and what have you, where it can benefit everybody. And again, I go back to my point, we see a lot of clients now who go, I'm at the end of my mortgage, I'm 74, what can I do? But actually they're not thinking, oh, I can take extra money out as well and give that to my grandkids and get them on the ladder. So again, if we can have more of that in this space, the advice element and approaching, I think there's a really big market opportunity there. It certainly won't solve the housing crisis, but it genuinely could be a significant part of what should be a different way of looking at getting on the ladder for first-time buyers.
Yeah. Rich, I saw you wanted to come in there.
Yeah, I think for me, yes, there are some challenges in the market, but back to that point, we've had a great market for the last few years. So a lot of people are sat on a lot of equity, and I think it's having appropriate advisors. So it's great to see new businesses coming into the sector who have got genuine mainstream mortgage expertise, and actually being able to educate more and more customers about the options that are available to them. And I think if more people looked at the home as an asset, looked a little bit more dispassionately, and use that alongside investments, alongside pensions to fund retirement, to help first-time buyers, then it's a good thing for some of the challenges that we face from a more societal point of view. We've got a pension gap, we've got an ageing population, and housing equity can really be used to address some of those issues.
Great. Thank you very much. Darren, do you have anything to add to that?
We're just in agreement, really. Ourselves, we pride ourselves on intergenerational lending. So the fact that I think there is an attitudinal mindset shift that people are not thinking, right, I want to get my mortgage paid off at 60, at 65 and walk away quietly. As Richard has said there, what can they do to use that asset in order to help their children, their grandchildren, and as Greg pointed out, it's awareness of the market, and for brokers to be aware that there are options there for them.
I think the mantra on it is sort of spend your house, not your wealth.
Nice way to put it. Thank you very much, gentlemen. I think we've learnt an awful lot from that, and it's nice to know that the older generation can help the younger generation in that way. Thank you very much. And thank you for joining us, and we hope to see you again next time.